ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already. Hit that subscribe and notification buttons as well. That way you're alerted to when we release new videos. We do release bonus content from time to time as well. Thanks to all those who continue to tune in. Really helps the channel grow. Thanks to all those thumbs up we continue to get. And welcome to all those who are new to the channel. Now, the nightly and weekend videos like tonight's video focus mostly on identifying triggers and targets for trades ranging from, scalps and intraday trades all the way up to swings and leap trades as well. So if you want to deeper dive into exactly how we set up our charts, the broadening formations, the levels of support resistance, things of that nature, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. And if you're not familiar with the STRAT, make sure you check out the link in the description of this video for the free quick reference PDF that we've got there for you. It gives you all the basics you need to know for the STRAT, and there's a huge STRAT community out there, so a lot of information out there on the internet for you. But yeah, I encourage you to watch the full video. We go through the triggers and targets on all time frames, so there's some pretty good insight that's been being given here. And with that, let's go ahead and take a look at the agenda. First, we will recap the price action from Friday, April 17th, before we zoom out like we always do and take a look at the week, month, and quarter, and year price action. Market makers' expected move we'll also go over for the week coming up, April 24th. And then we will zoom back in to set what we call our 4-hour markers, and then the triggers and targets for Monday, April 20th. We'll also set the triggers and targets for the full week of April 24th. And then we'll review the triggers and targets for the week, month, quarter, and year. The month, quarter, and year. New week coming up. So new triggers and targets for the week. So let's go ahead and get to the charts here, starting out with the 5-minute like we always do. This is how we take advantage of the proven and repeatable strategy that we implement. That proven and repeatable strategy is looking for first getting the opening print, but then looking for higher lows at or above the opening print to get into calls, targeting overnight high and previous high a day. Or we're looking for lower highs at or below opening print, looking to get into puts targeting overnight low and previous low a day. We can see here that we gapped up, right? So previous high of day was down here at 89.39. We went ahead and opened up here at 93.17, so pretty decent sized gap up. Little look into the gap. That also wanted to bring up the market maker's expected move high for the day was 92.87. If you're not familiar with that, make sure you check out last night's video where we go over, really any Thursday night video where we go over the market maker's expected move high for Friday. And then also on the weekend videos, we do go over the market maker's expected move for the full week. So, if you're not familiar with that, go back in our videos there and check those out. You can also go back a little bit further and see how those work out over time. About 70% of the time that the market maker's expectations are right, but there are times like this week where we go a little bit above and beyond, or sometimes if we're going to the downside, it would be below and beyond. So just keep that in mind. Another big level to mention here is the 200% fib extension of the full 2025 price range. So we basically doubled the range at this point at 94.30. So we're reaching a little bit of resistance. You'll see here in a second we're running into monthly broadening formation as well. So starting to see a little bit more resistance again, but we blew through the past resistance pretty easily over the past couple weeks. So we'll just have to see where things take us, right? It's just this face ripping rally. You kind of got to just find a pullback on the 15, maybe 1 hour, maybe catch one of those threes on the 4 hour, and kind of get in and go for the ride. And then just kind of protect your profits at that point. Today was more of a sideways day. It was a slow grind up after the gap up. Again, I was talking about before, we fell back into the gap. Oops, whoa. What's going on with the charts here? Come on. There we go. Anyways, yeah, we opened, we fell down into the gap a bit, but then we talk about half gap quite a lot here on this channel. It's a lot of times a intraday bounce point if we're not going to get a full gap fill. So that's kind of what we got today, was that half gap and then the push back up, right? So if you wanted to try and, buy like the higher low on the 5 minute, I'm sorry, on the 15 minute, that would have been your indicator here. You could have waited till we got back up to, opening print, wait for the higher low. It is slightly below opening print, so you'd be taking on a little bit of added risk there at that point. But then rejection off of that 94.30 level, started to see this lower high. We waited for this soft lower high here. We entered, and then we got this lower high here, dropped back down. We were higher high, so we went ahead and got out. So we got a little bit of both-sided action on both sides of the equation, but it was a Friday, so we traded pretty light, and we had a huge week, so not like some huge push to try and make a bunch of money here on Friday and try and make up for losses through the week or anything like that. Just wanted to maintain the profits that we made through the week, right? Don't give any of those back. And then if we can get a little bit more on top of that, then that's even an added bonus. And we're able to get that, and so accomplish what we wanted to accomplish today. Speaking of the 1 hour, let's go ahead and come on, Thinkorswim, what's going on? Let's get this. You know what? If you guys will allow me, I'm going to quit and reopen it and see what's going on with Thinkorswim. In the meantime, there again is not a whole lot to talk about on the higher time frames, because we've obviously blasted past the magnitude for both the quarter and year reversal strats. And we don't really have any other reversal strats that are lined up on the smaller time frames. So we will need to, again, continue to be patient. Again, if you're in, it's really you're up to your risk profile at this point, because there's the rally that we're in. We don't. It's not just like a day rally or a couple day rally. We're on like a 2-week rally at this point with, thin structure, not only on, the smaller time frames, be it the, 1 hour, 4 hour, even 1 day. So, we've been able to hold on to, a few of our last 2027 leaps. Those things are really going into deep profit at this point. We're deep in the money at this point as well. So, we're just kind of watching and protecting profits at this point. The pullback, there's always got to be a pullback. When it comes, that's the question. When it comes, it might be pretty violent because of all that thin structure that we've got to retrace on not just smaller time frames, but the day and the week, really. So, just be patient if you're not in right now, and if your risk profile is not buying in at the top and trying to just ride the wave. It's totally understandable. I'm a person that likes to go off of actual triggers and things like that. But when you're faced with a face rip and rally like this, sometimes you just got to jump on and enjoy the ride. So don't try and short it at the top right now. Again, a stock will always pull back. It can't go just straight up forever. But at the same time, even with the thin structure tracement, just with how, the AI push is led by chips and all of that stuff, chips is very strong right now. So even with the pullback, how much do we actually, how much do we pull back is kind of the question at this point, because again, we're going to get the pullback, but how far? We have a long way that we can go before setting a higher low. So there's plenty of room for pullback, as we were just talking about. What is going on now? Can't get my. I thought I was gonna do better. I don't know what's going on here. Let's try and get a little bit. So that's what we want. Oops. There we go. So this should work out a little bit better for us. Apologies for the delay in the video. But at this point, you know, it is just what it is. There we go. Yep. So we went over today's, you know, intraday levels. Let's get to the 1 hour here real quick and take a look. We did. Oops. There we go. We set a higher low yesterday. Of course, we got the gap up and go today. So in terms of that, come on now. This is killing things. There we go. All right. So you can see, again, we did get another higher low, although it was a soft higher low in this case, being that it's a 3 candle or an engulfing candle. We do like to see a 2 down, you know, be put in for the higher low. So in our opinion, a more concrete or solid higher low. So didn't get that, but you know, albeit it's still got the soft higher low and the higher high. So the trend is continuing to the upside on the hour. Again, another gap from this morning. So you know, gaps can act as magnets, and all gaps like to get filled. So we've got quite a bit to the downside that we could pull back, and again, we still can make that higher low after filling all those gaps. So just be on the lookout for that. Nothing really to look at on the 4 hour or 1 day, right? We haven't even put in soft higher lows on those. If we switch to the week and pull up a cleaner chart here, right? Just boom, boom, boom. That's, I mean, how do you, that type of stuff is not expected, right? Regardless of geopolitical, you know, things going on that acting as catalysts and earnings and all that type of stuff. That is a huge jump to go from, you know, at the low 39 essentially all the way up to 94, right? So we more than doubled in 3 weeks, which is pretty crazy. So again, you see the thin structure here, not only on, you know, this is on the week time frame, right? We don't have any pullbacks whatsoever. So we can get all the way down here to back to the 46.79 area, really anywhere above 39 and still put in a higher low. And technically that's maintaining the uptrend. So, again, not saying we have to fill all these gaps, but this is a pretty big gap here at the 63 to 58-ish level, right? Got the gap here. There's even a small sliver of a gap here as well. So just keep that in mind. On the month, again, we put in the higher low last month. We put in a higher high uptrend on the month. Not a whole lot we can say there. We've got our extended targets out here. Speaking of market makers expected move, at the beginning of the year, we always get the market makers expected move for the year, right? By looking at the January 27 contracts. We can see, you know, in January 26, if we look at the January 27 contracts and look at the, you know, either put together the at the money straddle and the money strangle, or just if your brokerage account shows you the market maker's expected move, you can use that as well. But the expected move for the year was up to 104.59. So, you know, when we make it there, what do we do? Again, I talked about monthly broadening formations that we're running into. We got this one right here. We broke through one. We're hitting another right now as well. That is also running in line or intersecting the 138.2 fib extension of the 2024 high to 2025 low. So, you know, we're again, like I said, we're reaching some resistance. We're pretty overbought. This is the month time frame, and we're in, you know, up above 70. I don't think that's ever even happened before. Yeah, I guess it did back in, you know, 2021, which was also another crazy year. You know, RSI did go up above 70. Let's see, I think it was at the end of 21. Yeah, about 81. So hit that 80 number. So we're getting up there. We're at about 71, almost 72. So just continue to keep your eye on that. By the time we reach this 104.59, we could be at that 80 on the RSI on the week again, and it may be time to pull back a little bit. Doesn't mean that we're going to do what we did in 2022, but you know, there should be some type of pullback there, all right? And then finally, well, not finally, but next to last on the quarter, we ran the 1 combo 2 down, combo 2 up to the 70.08 magnitude, and past now. So that's been run. Nothing to look at really further on the quarter and on the year. Very early in January, we went 2 up on the year, triggering this 2 down, 2 up, magnitude 70.08 as well. Reached that, went above all-time high. So not a whole lot to say there on the year either, right? It really comes down to the day-to-day trading and what's going to happen, right? So now, as far as the market maker's expected move for this coming week, let's go ahead and get that out there for you. And oops, yeah, that should be fine. Actually, let's pull up the week chart just to make it easy. There we go. So the market maker's expected move low is in the middle, or not quite in the middle, but the lower half, the upper part of the lower half of this past week's candle, and the market maker's expected move high would bring us up just above that 104.59 level to 106.54. So that would lend itself to say we're going to go 2 up again next week, and at the very least we should stay inside. If we don't go 2 up, it shouldn't go 2 down. If we stay within that market maker's expected move. Now again, it's that market maker's expected move is right about 70% of the time, so we could pull back and go below that and go 2 down, but this is what we've got for the market maker's expected move. The way that we get that number, whoa, where's my... There we go. If we look at the options chain for next week, April 24th, this is Thinkorswim. If we go over to the right, you can see a number in parentheses, 11.863. That is the market maker's expected move, plus or minus $11.86, we'll say, from the close price on Friday, which was 94.68. So if we flip over to our notes real quick, we can see that this is for Monday, April 20th. 178 trading days left in 2026 on Monday. The close price on Friday was 94.68, and we know that the month, quarter, and year are all green, but the expected move that we were just looking at, there's that plus or minus $11.86. So if you add that to 94.68, you get 106.54. You subtract that from 94.68, you get 82.82. So expected range next week of 106.54 to 82.82 for SOXL. All right. So yeah, that's your market maker's expected move. Let's go ahead and take a look at the charts and get prepared for Monday's price action. All right. Then we'll go over the triggers and targets for all our other time frames, the week, month, quarter, and year. Let's go to our swing chart. All right. So first things first, we make sure that we have the 4-hour markers on the chart. Oops, there we go. That is previous high a day, overnight high, overnight low, and previous low a day. We can't mark the opening print yet because we have to wait for price to open on Monday. So let's see, 94.15 is the price right now. So let's just say over the weekend we get a little bit of a pullback. Oops, that's not what we wanted to do. There we go. Let's say we get a pullback to about there. All right. Now on Monday, if price opens somewhere in between the overnight or over weekend range, let's say around here, we will be set up for two-sided play as opposed to today where we gapped up, right? And the reason is because overnight high and previous high a day are targets for us to the upside, right? So if we gap up, previous high a day is obviously out of the picture, and then depending on how close to overnight high we open, overnight high might be out of the picture as well very early. So we want to if you want to use the proven and repeatable strategy, it's beneficial to open somewhere within the previous day's range, right? But anyways, if we open here, we're just looking to see where price goes, right? If we open and we push up, maybe get a little rejection, pull back, but then we get a higher low at or above opening print, we want to look to get into calls, and we're targeting overnight high and previous high a day. If we get the opposite, if we open and we push down, maybe we get a bounce off of overnight low and then push back up, but then we ultimately get a lower high underneath opening print at or below opening print, then we want to look to get into puts, targeting overnight low and previous low a day. And of course, there's that gap from Thursday night to Friday morning. That could also act as a magnet as well. And there, we'll talk about that in a minute. But for the proven and repeatable strategy, higher lows at or above opening print. Look for calls, targeting previous high of day and overnight high. Lower highs at or below opening print. We want to get puts, targeting overnight low and previous low of day. All right. So now for more of a day trade type of situation, let's go ahead and bring up day chart and the 4-hour time frame and take a look at things from a little bit wider angle, right? This is for more of, like I said, a full day trade, maybe overnight swing as well. We did get a two up on Friday, so that offers the opportunity for a continuation to the upside and a reversal to the downside. So if we are going to get a reversal, we would get a 2 up, 2 down. As soon as that first 4-hour candle goes 2 down, that we would want to go ahead and buy, right? So you enter at the low of the 2 up, and then you exit at the low of the candle to the left of the 2 up. So entry here, exit here, very clearly defined. But again, we've got that gap. So if we do reach, previous low of day, maybe you leave a couple runners and see if we can't close that gap, right? Now to the upside, it'd just be a 2 up, 2 up continuation. And then we've got to look for, our extended targets out there. Actually, let me just bring up a tighter chart that has some of our smaller targets, right? So just above here, we've got a couple of fib extensions that we'll use as targets, how they line up, basically intersecting with like this weekly broadening formation. For one, this 9602 is going to be a decent level for us. And then, of course, we'll just, kind of move up, see where this hourly broadening formation crosses over this 9839. That could be another nice little target. But, we're in this rally, so you kind of just got to jump on and enjoy the ride, right? As far as the 1 day chart is concerned, let's go back to the day chart. Oops. Yeah, that's what we want. The day. Oh my goodness. So on the day, again, another opportunity for a reversal to the downside, but a continuation to the upside. If we go to the downside, we get this 2 up, 2 down. Obviously, gap fill would be the first objective. Then we've got a couple of fibs that fib extension can be bounce points as well. Again, we are in this uptrend, so it doesn't mean just because we trigger this reversal that we have to actually reach magnitude, right? We could trigger the reversal and get a little bit of play to the downside, but then get some type of higher low. So just watch for it. But if we do get the full move, obviously entry at previous low day or Friday's low and exit at Thursday's low, right? So again, some levels of support to fight through to get there. If we do get there, keep in mind that we are getting close to the market maker's expected move low. So, do we bounce here or do we go sideways here? That could be the possibility. Again, like I said, market maker's expected move is right about 70% of the time. So we could just end up going through the market maker's expected move low, trying to get back to filling this gap here possibly. I know that'd be kind of a push, but it could be something that could be tried next week. You never know what could happen over the weekend with the whole situation over there in Iran and whatnot. There's earnings coming up next week, tech earnings coming up. So we'll see how everything goes. But just know that there is some downside to be had. And again, we can come all the way down here to this, $79, $80 area before we put in a lower low. And that's really just, versus a soft higher low here. It's not even a 2 down. So, do we really consider this a higher low even, or just part of the continue to push up, right? And this is where that thin structure comes into that we're talking about, right? So could be real easily retraced, even with the levels of support that we've been able to identify, but that is there, right? So let's just go back to the notes here. Excuse me. I've been looking at the charts all day, so let's just finish up with the notes here, right? So we talked about on the 4-hour, there's a possibility for the 2 up, 2 down. There's your triggers. There's your targets on the way to magnitude. If we reach magnitude, there's your extended target, right? If we get the continuation to the upside, 2 up, 2 up, there's your trigger. And then here are your extended targets, right? On the day, if we go to get that reversal we just talked about, 2 up, 2 down, 83.31 is the trigger. Magnitude down there at 79.76. We've got some intermediate targets for you there as well. Again, we're in this uptrend, so we could bounce at any of those levels. And then if we do get the continuation on the upside, 2 up, 2 up, it triggers at 94.75. And then we've got some extended targets out here for you as well. On the week, if we go 2 up, 2 down, we've got to get below 75.25 to do that. It would trigger a 2 up, 2 down, magnitude all the way down there at 52.39. I don't know that we would make that there in 1 week, so we've got some intermediate targets there for you as well. And then if we continue to the upside, that triggers at 94.75, and we've got the extended targets listed out here for you as well. Again, April, we already talked about, we went 2 down, 2 up, reached magnitude, hit a lot of our targets, and I've had to add a couple more out there as we continue to push up. So I did go ahead and add those for us. Again, the quarter, 2 up continuation. Again, hit a lot of our targets, so I put some more out there. And on the year, we already ran the 2 up, 2 down, reaching magnitude, but we continue to push, so had to add the extra targets there as well for you. All right. But that'll do it for the weekend video. I hope everybody enjoyed it. Try to jam in as much information as possible without taking up too much of your time. I know that little snag with the charts there for a second did make the video a little bit longer, so apologies for that. But hopefully you didn't lose your interest and were able to still get some pretty good information from us. So we'll wrap it up like that, and we hope everybody enjoyed it. If you did and you made it this far, a thumbs up goes a long way. It really helps the channel grow. It's a free channel. We're giving out free information. And we just want to try and be able to reach more people, right? So a like helps that, whatever, YouTube algorithm or whatever, get us out to more people. And that's all we're trying to do, right? We're not asking for any membership fees or anything like that. So if we can just help your strategy, whether you want to adapt our full strategy or add pieces of our strategy to your, already established strategy to help make your trading even better, that's all we're shooting for. So try and make trading, as simple as possible. It's never going to be totally simple, and we try to make it as easy as possible. It's never going to be totally easy, but if you can really break it down and establish some patterns and some proven and repeatable strategies, then you're going to be successful. So hopefully this week was another great week for everybody on the channel. I know it really was for us. We're still holding on to a few of these 27s and the few 28s that we got when they dropped, and they're looking really nice. But just want to see where we go next week, right? So we'll wrap it up at this point. If you're watching this Saturday or Sunday, we hope you get some good rest Sunday night and wake up refreshed Monday morning. If you're watching this Monday morning or Monday during the day, we hope you got some good rest on Sunday night and woke up refreshed this morning. And we look forward to getting out there and trading with you.